Welcome to Real Estate Explained, the podcast that gives you a backstage pass to the ever-evolving world of real estate. I'm your host, Nick Bush, a realtor with over a decade of experience helping clients buy, sell, and invest with confidence. Whether you're a first-time home buyer, a seasoned investor, or just curious about the market, this show is for you. Each week, we'll dive into trending topics, break down the latest real estate news, and bring you expert interviews with the pros so you're prepared for every step of the journey. Ready to turn your real estate goals into reality? Keep watching. We got you back, bro. Mortgage Coach Marcus in the building.
FMG, what's happening?
FMG, Fields Mortgage Group.
Yes, sir.
There we go. Powered by
Jesus.
By Jesus. Shouts to God. You know what I mean?
You really tried to go technical on it.
I was just thinking like powered by, and then I forgot it's Fields Mortgage Group is all you need to know. You've been here before. You've been here like 4 or 5 times now. But you're back on this version of the podcast where we got a professional setup. And so reintroduce yourself to the people in case they don't know who you are.
Marcus Fields, mortgage broker right here in Warrenton, Virginia. So there's an argument right now that I'm actually pushing that Warrenton is part of the DMV, but y'all try to say it's not.
Yeah.
But I don't need to hear your mouth about it.
It's definitely
there you go, Bronson.
It's definitely not. That's the cutoff. It used to be. It's okay. I mean, there's cows on the everywhere there. I don't know if the DMV has cows, but as we digress, no, I actually have a clip that I keep having to tell. I keep having to remind myself to remind my Karen. Shout out to Karen's my social media manager.
Social media Karen's.
Her name is Karen's.
Oh.
Karen's is my social media manager. That's her name. And shout out to her. She's a beast. And
she is fire. I
have to keep reminding her to put out this clip where Eric and I talked about where the DMV actually is. And so the DMV is definitely not in Warrenton. But I'm glad you're doing a lot of business out there and you hold it down in Fauquier County.
I'm out there in Warrenton, that Piedmont area, that Blue Ridge area. I love the Culpeper area, Rappahannock area. But it's nestled on the western side of Prince William County. So Gainesville, Haymarket, Bristow. And but I'm licensed in soon to be 7 states. I'm letting my Delaware license go. But
what are those states?
D.C., Maryland, Virginia, Illinois, Tennessee, Georgia, and Florida.
Boom.
And I'm tired of Delaware.
So if you want to buy a house, you need a loan, refinance, anything in any of those states,
loans,
holla at Mortgage Coach Marcus.
Reverse mortgages, all that.
All right, well, we're gonna get into this big beautiful bill. We got like a 30-minute time slot right now because we've been yapping, we've been yapping in here for 15 minutes. So, but I do want to talk about the big beautiful bill because it's important right now. Trump just dropped it. I sent you the article this morning, like, we're going to talk about this today. And that's also when I kind of started researching it too because I had no clue.
You jumped me right on in.
But I think that it's a cool thing to talk about. So this article comes from Investopedia.com. And it just says the 3 key changes in the big, beautiful bill. I like to shout out the person who wrote it, Terry Lane. Basically, it says the key takeaways of the big, beautiful bill. The legislation, I can't even, the legislation restores tax deductions for mortgage insurance. It also expands the low-income housing tax credit for builders who create affordable rental properties, and then it expands the state and local tax deductions, which could also benefit the housing market in those areas. So we're just gonna hit on those 3 points and get your opinion. I'm gonna tell you my opinion. We're gonna see how your buyers are affected.
Give me those 3 again, because I was listening to it in my head again.
So number 1, the legislation restores tax deductions for mortgage insurance, and I'm going to talk about all those. I'll give you some more insight into those things. The second thing is it expands the low-income housing tax credit for builders who create affordable rental properties, and then expands state and local tax deductions, which could also benefit the housing market in some areas. Okay. So if we just hit the first one, right, when it talks about mortgage insurance, so basically. There was like a deduction that was removed for people to write off their mortgage insurance. And so we all know that first-time home buyers, and I think also like savvy home buyers, they know, okay, principal, interest, tax, insurance, that's what your mortgage is. Right. And then if you're buying in a condo association or in a townhouse community, you have a condo fee and HOA. And then there's that thing, that mortgage insurance thing PMI. That people are always, PMI, right? That people are always like, do I got to pay PMI? Yep. Why PMI? What's PMI? And you're trying to break it down. And the long and short of it is, if you're not putting 20% down, right, you have to pay PMI. Yeah. And PMI is not so bad because, especially in our market, home prices go up. You're paying your mortgage balance down. It drops off automatically at 78%.
On conventional loans.
On conventional. It's different. Oh, FHAs is still lifetime?
Life of the loan.
Life of the loan, right? And so people hate playing PMI because they feel like it's a waste of money. They're kind of throwing money down the drain. Is that how you get?
Yeah, and one side of me, I understand from a consumer perspective, like why am I paying for, especially someone that's got 720 credit scores and they pay their bills, and I'm not a default risk. I'm not going to go into foreclosure. So why am I paying insurance? Just like why would I pay car insurance on a car that's not mine? It's like there's no risk there, right? Because it's not mine. But that's essentially what it is. In the event that something happens, death, loss of income, whatever it might be, because you're not putting down the 20%, you got to pay that insurance premium. Insurance, it's broken down monthly. But it's not a bad thing, right? Because the truth is, in this area, with the average sales price might be $500, $525, whatever it is, 20% of that's $100,000.
Yeah.
Most people don't have $100,000 to put down, but they do have $15,000. So that, and depending on your credit situation and the loan and even the lender that you go through, and the insurance companies that these lenders are doing the PMI through, your monthly PMI can be $60 a month.
Yeah,
which is nothing.
And it all comes down to, kind of like your file, right? Like your profile as a buyer, right?
Yeah, case
Obviously,
by case.
640 credit score, right? You're in the FHA bubble. You're going to have higher PMI. And then FHA has decided you're a risk forever, right? And so they're keeping it on the lifetime of the loan. Conventional 680 PMI is going to be more expensive than conventional 760 PMI, right?
Correct.
So it's just like, the higher your credit score, the better, I guess I'm calling it the rate, but that amount could be, right? I know nothing is exact, but it could be. But also, if you're going conventional, you could pay the PMI off at settlement, right?
Yeah, so that's a trick that a lot of lenders don't even think about, the single premium. So you can say, well, I'll put down 3%. I can look at monthly PMI, or I can put the PMI into the interest rate. That's called lender paid PMI. But then there's the middle ground. You say, well, what is the entire policy going to cost? It might only cost $6,000.
Yeah.
So you pay it at the closing table. It's part of your down payment, part of your closing costs. It's part of that whole bundle of money that you bring to the table. And then, you don't have to pay that PMI ever in life.
Yeah.
You paid it at the table. So that's a single premium. And it's a really good opportunity, a good option to look at. I've done it. I've actually won a bunch of deals because other lenders just don't know to do that.
They don't know to even do that, right?
They don't know to do it.
And so this thing is cool, and basically, like, however you feel about Trump is whatever, but the big, beautiful bill. And my wife and I were in the house, we're talking about the big, beautiful bill because, you care about some things and you don't care about other things. It depends on what affects you. But for home buyers, in particular, it just says taxpayers who qualified to have this PMI deduction get an average deduction of $2,300 a year, so $2,364 a year. In 2021, the last year that the taxpayer that tax mortgage insurance deduction was available, and so
it's getting ready to go up now, right?
Now you can deduct again. So in 2021. You could deduct $2,300 when you did your taxes because you were paying PMI, and now that's coming back again. So what's that? I mean, so if you're paying $1,000 PMI, which is like an insane amount.
Well, for those numbers, $2,300 that you could write off is almost $200 a month worth of PMI.
I was trying to do the math, and I was like, wait, that's not the math.
You stick to the sticks and
Can I keep the lender do the math? You know
what
I
I'm about to say.
So that's $200 PMI. So now when you're having conversations with the buyers, you could be like, yo,
it's tax deductible.
You do have to pay this PMI out of your pocket every month, but it's tax deductible.
Right.
So you're smooth.
Especially if it's, up to $200 a month.
So how are you coaching people through PMI? Like, what are you saying? Like, what are you saying, like, pros, cons? Are you telling them just get it done?
What markets you want to answer this?
I want the real markets.
The real market say if you got 20%, then we have to talk about it.
Okay.
Because you're not paying it.
Yeah.
But, of course, I say it a different way. If you have 20% down payment, you don't pay PMI. But PMI, honestly, it's protection for the lender in the event that you default on this mortgage. You're not going to default, right? If you have any problems, call me and we'll figure it out. Do my loan modification or whatever. But it's very simple because you don't have the 20%. The lender has to ensure they get their money back. It's okay, right? There's a large percentage of people that don't have the 20%, so it's okay, right? And the better your credit profile, the cheaper the policy is or the premium is. And we factor that in. And once they just adjust to that fact that they have to pay it, then we move on. The other thing that I talk to them about is, why do you have such negative feelings about the PMI? What is it, right? And usually it's only because someone, like the parents or whoever might be, said paying PMI is a bad thing. Okay, well, there's alternatives to not paying PMI, right?
Yeah.
Because the reality is this. If you flip the table and you say, I'm going to lend money to somebody and they don't have what I need to feel comfortable lending this. So in the event that I don't get all of my money back, I have to have some security. Like you as a human being or consumer would pay a little bit of money or require a little bit of money be paid so that you can get all your money back in the event that your investment doesn't come back to where
it's almost like you're paying interest on the loan every month, right?
It's not interest, but it is.
Well, in like a if I loaned you money personally, right?
Yeah.
Or vice versa. And I'm like, all right, Marcus, your track record, your credit score is basically says you don't pay your bills on time every month. So you owe me $1,000 a month, right? That's going to be your payment. But I'm going to add another $50 PMI every month just to make sure that I have something in the bank when that $1,000 doesn't come through.
Yeah, and in the event that something happens, because life happens.
And even better, like now you can write that off. You can write the $50 off that you owe me. You know, right. I'm implying that Marcus owes me money. We should just keep that narrative up. No. Actually, it's the opposite. You looked out for me. You know.
Yeah.
And so I think that PMI gets a super bad rap. And I don't know why, I guess I understand why it's necessary, but I think this makes it really easy for buyers to digest.
Well, I think also because our appetite is insatiable for when we want what we want. Right?
Yeah.
So we want the house, we want the lower payment, we want the value to go up. But what we don't realize is we don't always have what it takes to get what we want.
That's facts.
So let's figure out some compromise here. The values are going up on properties so rapidly that if you take a FHA loan with the PMI or a conventional loan with the PMI, and let's say you only put down 10%, 5%, whatever it might be, the value in the next 3 to 5 years very well could be to a point where you refinance and the rates are lower when it makes sense. You refinance and the PMI goes away. So
yeah, and as a first-time home buyer, depending on age, maybe if you're a 45-year-old first-time home buyer, but if you're a 25-year-old first-time home buyer and you know that this isn't your last home, it's like, why are we putting that 20% down? I've had that conversation also, like. Yeah. You want to just put $100,000 down because you could buy this house today, rent it out, and buy another one the next year, and so on and so forth. You know, and so I'm like, yo, eat that PMI. I actually, my DC house has an FHA loan, and so I'm paying PMI forever. And what sucks is it doesn't. I mean, I don't know if it sucks or not. I guess like I'm net positive because my interest rate is 3.6%. And so I could be like, PMI is a waste, and I could refinance into a 7% interest rate, and that would be an L. So
just for the sake of removing the line item.
It always is just about like, what's your monthly payment? What's like your cash flow in a month? Yeah. Like, how much are you paying monthly? Can you afford that? It's all good. Yeah. Yeah, and mine is rental. So even with my PMI on my mortgage, I'm cashing out.
Yeah, I mean, it's all good.
So you've been in Fauquier basically your whole life, right?
Yeah. And we moved from Herndon when I was like 9.
And so what about financially, like from like a financial standpoint and price point standpoint, what makes Fauquier more attractive than somewhere like McLean or Fairfax County, et cetera?
Number one, I don't know about the price. Well, the price points are better. You can get more for your money out there, right? In my home, in my neighborhood, we've got average sales price is probably about $800,000 in our neighborhood. We're in one of the more exclusive. It's not a gated community, but it's called Brookside. Good schools, people are friendly. It's quiet. Now there's not a lot of stores and things like that. They like to keep Fauquier like a little bit slower. So they've been trying to get a Trader Joe's and different things. I mean, we don't even have a Lidl or nothing like that in there. So they try to keep it really mom and pop, small town feel. We got Panera and things like that, but. I like it because it's a really comfortable pace for me. I do not like the city from that standpoint, but because it moves too fast, it's just too. I don't need all that noise.
So it's interesting because you have places like DC, right? You have New York, Cali, where taxes are high, home prices are high, and taxes are high.
Right.
And so when someone's making money, high earner, they also are giving a lot of that money back in taxes.
Yeah.
Right. and then the home values are high. So you
Great
make a
segue, by the way.
Yeah, you see what I'm doing here?
Hey, y'all, Nick getting better.
So the other thing that this bill does, the big beautiful bill, it increases the state and local taxes deduction. So it's called the SALT deductions, which lets taxpayers deduct what they pay in state and local taxes from their federal tax return.
Yeah.
So the bill increased the SALT deductions from $10,000 to $40,000. So if you're in a place, if you want to get out of the country in the slow vibes, right, and you want to move to a place like New York, Cali, DC, where it's a little more expensive, but you like, I make $150,000,
yeah,
or $120,000, which is what our area is decided the AMI is, right?
150.
150. Oh, it's 150.
80% is the 120.
Oh, okay, that's where I'm at. Yeah. Okay, so 150, right? It's like you can deduct $40,000 now.
Yeah.
And not from your federal tax returns, and not have to.
And that's good. And that's good because like Loudoun County has a really high tax rate. Fairfax does. Prince William. Prince George's County is one of the highest tax rates around. Montgomery County. So you've got these more affluent areas, if you will.
Yeah.
That even from the national viewpoint are more affluent. They have a higher tax rate. Not like New York, not like California.
Yeah.
But outside of that, in Hawaii, outside of that, they're on the higher side of things, right?
Yeah.
So you can write off if your taxes, even if they're 1% of your assessed value. Assessed value is $750. So you're talking $7,500 a year for taxes, which breaks down to about $600 a month, right? So you're talking like a really good amount that you can write off.
Yeah.
And
this is from your federal tax return. So it's like if you're a high earner, so you got to think like what this does to the housing market, because if you take a place like McLean, you take a place like Great Falls, or Montgomery County, Bethesda, right? These are places where the wealthy live, right? Where if you have a lot of money or you make decent money, 150, 200,000, right? Household 300,000. You're in Vienna, you're in McLean, you're in Moco, right?
That's $2 million.
That's what you do, right? But you have to pay that whole ticket. And you got a place like the country, like Western Prince William County, that's built up, or even like Loudoun County that has grown so much over the last 15 years, because you get no benefit from living in those areas except the prestige. So then the market is stagnated, right? It's stagnated, right? What happens if all of the first-time home buyers bought the houses that the downsizers are selling in McLean? Well, the market continues to increase. Instead, they're like, we're going to Loudoun.
Right.
We're going to Prince William County. Now there's an incentive for home buyers buying in those areas that make a lot of money. You can deduct the $40,000. So it's like, okay, we could be in this wealthy district in the right school district, and it makes sense because that extra, $200,000 we might have paid for our house, we get to deduct $40,000.
Yeah, and it might be tight throughout the year. Well, not as comfortable throughout the year, but when you file your taxes, you get some back of what you've had to sacrifice.
It offsets.
But then you also have people with this other part of the bill where you got the low to moderate income and the home buyer. And this affordable housing. And affordable housing is a buzzword, and it has so many different connotations to it.
Yeah.
And truthfully, depending on how you look, I mean, I've got my own mindset about it. You might have your own thought about it. But I think this also gives people the opportunity to, it gives builders and investors, developers, opportunity to go ahead and build something that helps people move in. Yeah. And it also increase the population, but it increases the opportunity for there to be shared wealth amongst the people too.
Yeah, look at that. Look at Marcus with the segue. You know what I mean? So that's the other thing, right? So another key provision in the bill expands the low income housing tax credit for builders who create or rehabilitate rental housing for low and medium income renters. So that's everywhere, but that could be a place like Baltimore, right? I remember 2017, 2018, it was opportunity zones. Everyone was talking about them. And I think places in DC, like Deanwood got popping then, Trinidad got popping in because everybody was investing in opportunity zones. And this is a good thing. So people are like, oh, the rich getting richer, da-da-da. And so you can look at this and be like, all right, so a builder can go buy in a neighborhood where prices are low or where it's, cheap to buy, and they can buy that real estate and rent it out. It's but if they're creating a solid product for people to live in, they get a tax credit for it, but they're incentivized to do that. So it's that is why they will do it. So I always think it's a positive, and I'm on this side of the aisle, right, where I'm just get rich people like, and I think I'm gonna do a take about this today, where it's like, yeah, like wealthy people are getting like the rich are getting richer, right? But they're getting richer because they qualify to get richer. Like you have to make like the tax code is for every American. It's for every American, but you have to qualify for the incentives. So you have to make X amount of dollars to qualify for that incentive. And I feel like if you make X amount of dollars, you should qualify for the incentive. When we were in Pontiac, right, and I say, okay, there's a billionaire dude like walking around the campus, but he employs 9,000 people. It's 60,000 people in Pontiac, I looked it up, and 48,000 people that are adults. He's the economy in this joint. Let's give him some incentives, you know?
Yeah.
And
I'm
so
glad you looked that up.
yeah, I looked it up because I was curious because I have this debate with my wife and mother-in-law all the time because around the election time, I was we were debating all the time, and I was like, why do we hate the billionaires? Like, why am I supposed? I need to know, why am I supposed to hate the billionaires? Are we mad because they got money, or like, is there something else? And it's like, well, they don't pay taxes. The richer get rich. Well, it's like, dog, my packages get here quick, bro. And how many employees does Jeff Bezos employ? And it's just like, yeah, he probably should get some incentives. You know what I mean? And so when I looked at Matt, shout to Matt Ishbia, he owns the Suns. I'm like, okay, he's probably getting some incentives, but he employs 9,000 people of the 48,000 adults in Pontiac. Like, what happens if he moves his shop?
That economy crashes in a very, very real way.
Like, I'm like, you should be appreciative of a billionaire who took a risk, to build a big company so you can work there.
Yeah, and additional shout out to him. There's nothing negative you can say about that dude. Like,
yeah, he was a good dude.
I've been under his voice and like mentoring. He told me something. It's for almost 3 years. He told me something about 2 months ago, and he was like, he looked me in the face. He was like, "You're the expert, right? Nobody else knows what you know. Tell the people what to do. They don't know, right? Like, lead them." And I was like, sometimes, and it fell on the heels of what you and I were talking about. Like, yo, how come you don't do this? Why you don't do? Yeah. And I'm second guessing myself. Yeah. So right after you and I were having and after 22 years in the business, there's still self-doubt. There's still this thing that I battle myself regularly, right? Because even when Javier was standing here, like, I'm listening to him, I'm like, yeah, I do that. I used to do that. You kind of you flip into this competition mode, but it's really not about him. Yeah. It's about me, right? Yeah. And if I tell myself I can't do it enough, then I won't do it. Yeah. But this man who is a billionaire that owns the team that we watch regularly, right? I think the KD trade was a good trade, by the way. They got to get rid of Bradley Beal, but that's another story. He said, yo, you're the expert. Yeah. Tell him what to do. And like when I say, yo, take this loan with the PMI, or you can buy this house or buy that house, depending on what you want or what you don't want. But this, based on what you told me, this is the right option, right? This is the right property for you and your family. And now with these bills coming out, you've got these home buying incentives, the tax credits and things like that. One thing I wish that I would see, like even in Fauquier, it's like there are a lot of dead spaces. Mm-hmm. If you look up Brookside is on the old Army base for Vent Hill Army Base. That's what they used to call it. There are barracks that are there. There's like an old gym that they continue to refurbish, and they kind of like put Band-Aids on it, whatever. But these barracks have been boarded up, windows broken or whatever. You could build affordable housing. You could do something with these dead spaces in so many different areas. Yeah. But the politics of it all, the people who got their hands greased, is like, it drives me nuts, man.
And literally, that's what the bill is geared for, right?
I hope they shut these people
low
down.
Income housing tax credit for builders who create or rehabilitate rental housing for low and medium income renters. So you can do that.
And that's why, like, in the space that I'm in now, like, I can do land development. Yeah. I can put the team together that could go in and be like, this is what the plan is. They're trying to do it in some other spaces over in the area. But I'm like, yo, we could revitalize this area, because the issue is that people, even with the prices and the rates and all the things, people can't even afford to live in a house that you might rent out at fair market rent. But because everything else is so expensive, they're struggling to pay fair market rent to you. So we need some other spaces that are still good green spaces. They still have the amenities, but because you make $5,000 less than what you, let's say, you need or whatever to be able to live comfortably, you shouldn't have to live in the hood.
And I don't know this as a fact, right?
Yeah.
But what I'm assuming is that when you're building or you're investing, you win on the buy side, right? A flipper, when you're flipping a house, you win on the buy side. You try to buy as low as possible so you could bake in your return. When you're building, you have to build, at the cheapest cost, so you can bake in the return, because what the market can do anything, right? And so this says the low-income housing tax credit remains the nation's most effective tool for building and preserving affordable rental housing, said David Dworkin, president and CEO of the National Housing Conference, right? And what that sounds like to me is that, like, okay, if I use Baltimore as, because that's the easiest.
Yeah.
Okay, I can buy a house for $60,000 in Baltimore. I could buy, and there might be 5 of these on this block, and everything's bandos, right? There's 5 bandos, and the other ones are still there. Usually in Baltimore, it's like 15 bandos, and then 2 houses that are not abandoned, right? And so it's like, okay, well, if each of those costs $50,000, I can buy them at $35,000, right? Which doesn't affect the pricing in the neighborhood, because people think like, oh, somebody wealthy that can buy all these properties are going to come, they're going to buy them at a premium, then housing prices are going to go up, and now we can't afford to live here. Well, no, an investor's buying on the cheap, right? Because they need to make their money on the back end. So it's like, okay, these houses that are $50,000, I can buy them now for $35,000 and put quality, and I'm going to make them nice, right? And then I can put a tenant in there, quality tenant in there. So it's actually really positive for someone, if you have a great developer, investor, builder to come in that's going to build a quality product, that you get to chill in something that's nice, and it's geared to affordable housing.
Yeah.
So they're not saying like, you're going to buy this and we're going to move in the recent college grads. It's like, no, this is for low income people.
Yeah. Families. I mean, everybody needs to start, man. Like, you got to find a good place to launch your dream, because if nobody gives you some help, a hand, it's not even a handout. And sometimes a handout is okay, right? Yeah. But it's really a hand up. Be like, man, somebody's got to take the step and reach out to these people who are hardworking people, have dreams, that are just watching everybody else accomplish their dreams. And that's where that self-doubt, just like you and I face sometimes. That self-doubt, like, man, we'd never be able to get it. And then time goes on. And
all right, so we just went over this big, beautiful. Are we shouting Trump out? Are you shouting Trump out, or you not shouting Trump out?
Personally, I ain't shouting him out. But, I mean, like, as a human being, I don't really rock with how he rolls. Yeah. But as a businessman, I think that, like, he's made some, businesses rise and fall, right? Yeah. And he looks at himself and things he does as a business. Yeah. So I'm cool. I'm cool with the things that he does. From that perspective. But again, some of the other stuff is just he just does too much, right? I'm not going to the UFC fight. You going to the UFC fight?
Yeah, so Trump's trying to pull off a UFC fight on the White House lawn with 20,000 people, which, obviously that's a lot of taxpayer money to pull that off, right? Because you have to protect the White House, so that's, you got to use Secret Service. So
it's hard to get a tour at the White House. How you gonna have all those people come to the lawn?
And we have to pay for that event to happen. So yeah, I'm already paying for the event to happen. So I would definitely go to the UFC. That's dope, bro. I don't care who's in office. I'm rolling. You going? Of course. I'm probably not actually gonna go, but I would go. Like, if everyone's like, yo, we go. What am I gonna go dolo and watch the UFC fight? Plus, inside TV is better entertainment. But if someone's like, yo, we about to hit the White House, I'm doing it. I'm doing it. Yeah,
we might have to.
Yeah, stop being, get over it, bro. So, before I let you out of here, bro, Lender on the podcast, so that was a big, beautiful bill. Were you in? Was that good, bro? We just like.
You liked it?
Yeah, we crushed, bro. I feel like we crushed. We gave a lot of good advice.
Let's get it.
So, I'm rocking with it. Lender on the podcast in 2022, 2023, Marry the House, Date the Rate came out. Every real estate agent lender was saying it for 6 months. 2-1 buy down, 2-1 buy down, and all those people that 2-1 did not have the ability to refinance. Yeah. So why have interest rates not gone down?
Honestly, I don't know. I don't think that any of us really know. It's so many different moving parts, right? They talk about inflation. They talk about the job report, the employment reports. they could move them down if they really wanted to. I think now we've flipped into this buyer's market, right? Would you agree?
Yeah. I think we're balanced. I don't want to say we're buyers, but we're balanced.
So it's more. It's okay. I think that it's coming.
The rate decrease.
Yeah, I mean, because here's the thing: like, you've got people that have been seeing the programs and seeing, all the social media stuff, and a lot of people have gotten prepared and said, "I'm going to get pre-approved," or their pre-approval ran out, right? And they're willing to do it again quickly, no big deal. But now there's inventory's up 80% or whatever it might be. So now there's more opportunity out here. So with more people in the market, it's time to drop these rates, right?
Yeah.
Because, I mean, it's a lot of life is just unaffordable, and honestly, I think it's time. I thought the rates were going to be lower by the end of the first quarter, but they may be a little bit lower by the end of the third quarter. But we're still down. We're still under 7%, like across the board. So.
Okay.
So the 40-year historical average is 7%. So we're beneath that. If they get to 6.5 by the end of the summer, by the end of the third quarter, great.
Yeah.
But like by now, and like I think people just need to stop thinking about the 2 and 3%. Like that was
get it out of your mind.
Yeah, it was an anomaly, right? Because here's the reality: if you want the 2 and 3% interest rate, you got to go back to that environment that gave you the 2 and 3% interest rate.
$80K over.
Do you want the masks again?
Yeah.
Right? Do you want the shot? All that stuff. Do you want COVID again? No, nobody wants that. So we're still winning. We're under 7%. So let's just keep it moving, man. Buy real estate. Buy real estate. Buy real estate.
Do it. All right, bro. Thanks for joining me, my dude. Where can the people find you if they want to buy a house?
The mean streets of Warrenton, Virginia, man. 25 South 4th Street, Warrenton, Virginia, 20186. Cell phone 703-867-9152. At Mortgage Coach Marcus, at Fields Mortgage Group, easily found. FieldsMG.com. I'm all over the place.
And follow Marcus on Instagram, Mortgage Coach Marcus for sure, because he's always dropping content. And he's excited about it. He's got these little graphs. He sends them to my DMs all the time. He tags me, so I add him. So if you follow me, you'll see some of it. But like he's in the game for real, trying to give you information. So shouts to you, bro.